In this video, I am going to be sharing a simple swing trading strategy that you can use to trade in the stock markets. But before we start, be sure to hit that like button and subscribe to our channel so that you don't miss on any of our new videos. With that being said, let's get into today's video. So the strategy revolves around a simple price action principle. The principle states that in a weak trend, the pullbacks are deep, and in a strong trend, the pullbacks are shallow. So we will use this principle to formulate our strategy. Since this strategy is a swing trading strategy, we will only use it on the daily time frame. We will use 3 indicators in our strategy. Number 1. The 200 period moving average. Number 2. The ADX indicator. And number 3. The stochastic indicator. So now, let's understand how we will use each of these indicators. First, let's talk about the 200 period moving average. So we will use a 200 period exponential moving average for the trend direction. The 200 EMA is used by a lot of traders, and hence it serves a self-fulfilling prophecy. When the price is above the 200 period moving average, and the 200 EMA is sloped upwards, it is regarded as an uptrend. So we will only look for buying opportunities in an uptrend. Similarly, when the price is trading below the 200 EMA, and the EMA is sloped downwards, it is regarded as a downtrend. In a downtrend, we will look for selling opportunities only. In a sideways market, we see that the EMA stays flat and the price keeps on revolving around it. We will avoid trading in such markets. Now let's look at the ADX indicator. The ADX indicator consists of 3 lines. The ADX line, the positive DI, and the negative DI. The positive DI shows the strength of the buyers and the negative DI shows the strength of the sellers. The ADX line shows the difference between the values of the positive DI and negative DI. The ADX line helps us in identifying whether the market is trending or is in sideways range. When the ADX line is above the value of 30, the markets are in a trending phase. And when the ADX line is below 30, the markets are in a sideways range. We will only like to trade when the ADX line is above 30. The positive DI and the negative DI show us the trend of the market. So, when the positive DI is above the negative DI, the market is said to be in an uptrend. And when the negative DI is above the positive DI, the market is said to be in a downtrend. So we will look for buying opportunities when the ADX is above 30, and the positive DI is above the negative DI. Similarly, we will look for selling opportunities when the ADX is above 30 and the negative DI is above the positive DI. When the ADX is below 30, we will avoid taking any positions. We will use the ADX at their default 14 period settings with the threshold level set to 30 instead of 20. Now let's look at the last indicator, that is the stochastic. The stochastic is a simple oscillator that helps us in identifying short-term momentum of the asset. The value of stochastic revolves from 0 to 100. When the stochastic goes below 20, the stocks is said to be oversold, and we can expect the price to make an up move. Similarly, when the stochastic goes beyond 80, the asset is said to be overbought, and we can expect the price to make a down move. On the stochastic, we will change the settings. We will change the percent K to 8. We will change the percent K smoothing to 3. And we will leave the percent D unchanged. Now we have successfully plotted all the indicators necessary for this strategy. Let's move on to the exact rules for the strategy. First, let's look at the rules for buying. Rule number 1. The price should be above the moving average. Rule number 2. The ADX line should be above the 30 level. Rule number 3. The positive DI should be above the negative DI. And rule number 4. The stochastic should be below the 20 level. When all of these rules are met, we will initiate a buy order. Let's look at a buy trade to understand this strategy. So here on this chart we can clearly see that the price was trading above the 200 period EMA. And the EMA was also sloped upwards. So we are in an uptrend. If you remember, we will only look for buying opportunities in an uptrend. Now let's zoom in. On this candle, we see that the ADX line was above 30 level and the positive DI was above negative DI. At the same time, the stochastic was below 80. So this was a perfect opportunity for us to buy. So we will place a buy order above the high of this candle. We will keep our stop loss below the low of this candle, and we will place our targets at 1:1.5 risk-reward ratio. The next candle triggers our buy order, and we made profits on this trade. Now let's look at the rules for selling. Rule number 1. The price should be below the 200 EMA. Rule number 2. The ADX line should be above the 30 level. Rule number 3. The negative DI should be above the positive DI. And rule number 4. The stochastic should be above the 80 level. When all of these rules are met, we will initiate a sell order. Now, let's look at a trade example. Here on this chart, we can clearly see that the price was trading below the 200 EMA and the EMA was sloped downwards. So we will be looking for selling opportunities only. On this candle, we see that the ADX line was above the 30 level and the negative DI was above the positive DI. So this was also a bearish sign. We also see that the stochastic was above 80 on this candle. So this was a perfect setup. We will place a sell order below the low of this candle, and we place our stop loss above the high of this candle. We can keep our targets at 1:1.5 risk-reward ratio. As you can see, the price gave a strong down move after our entry. So we made profits on this trade. That brings us to the end of this video. If you liked this video, then be sure to hit that like button and subscribe to our channel so that you don't miss on any of our new videos. See you soon.